Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the MarketSite is Chris Englebert. He's the Managing Director at Beirne Wealth Management, an extra special edition for us. Happy one-year anniversary.
Yes, it is. Happy 1 year.
How did we get together? Eric Cott over at OIC, right?
Yeah.
He knows everybody.
Right.
Like the Where's Waldo of the investment advisory business.
And we headed down to Philly in the summer last summer and did our first from there. And here we are in a beautiful studio.
In the middle of Times Square, right?
So
let's get to everything that we've spoke about over the past year, focusing on registered investment advisors and their clients and their business. Starting off with the clients, social media and the role it plays for your clients.
Yeah, I'm very excited. I am getting more and more inquiries from high net worth clients. They want to know, what do we do with social media? And I keep saying you've got to get on it because that is now the new news source that everybody's really reading about anymore. Whether or not you love or hate Jack Dorsey and Twitter, Twitter is obviously becoming the fastest go-to place for having news on the markets, on individual stocks, etc. I'm very excited about the fact that we're seeing clients really understand that social media plays a very important role in investing, just like newspapers did a long time ago.
Well, if you didn't follow Nasdaq, Jill Malandrino, and Trade Talks on Twitter, then you would never get a chance to see this fabulous content that we're putting out there with you. We had to put that shameless plug in there. Right. Let's talk about power of attorney, a relatively old term in your business, but a lot of important implications.
Yeah, it was one of my favorite topics that we talked about during our Trade Talk series. And again, I keep coming back to, everybody, gets named as a power of attorney, and then all of a sudden when they have to use it, they don't quite know what they should be doing. And it's one of those things where, clients need to understand the full ramifications. And when somebody says to you, hey, Jill, I just named you as my power of attorney, you've got to have a conversation with that person and understand what are their wishes, what do they want you to do. And maybe sometimes you might not want to be a power of attorney because you just can't handle it.
It's like getting asked if you want to be the godparents. Well, do you really want to take those kids?
Right.
All right, clients needing to understand risk, and I can imagine as an advisor, it's not the easiest conversation to have.
Right, very difficult right now. You're going to see at our last segment, we're going to talk about the markets. FOMO, fear of missing out, is really running rampant right now. A lot of large caps tech stocks have done very, very well. Again, we come back to complacency. A lot of people really need to understand what their risk profile is that they have right now. They may not understand it. I mean, we just had last month one of the largest companies lose the biggest market cap we've ever seen in history, and nobody really seemed to blink about that. And my concern is that when volatility comes back in the markets, the average investor may not be psychologically prepared for it.
So if you have someone who's nearing retirement age and they see a lot of high-flying stocks move and they want to participate, it's not always appropriate.
No, absolutely not. Absolutely not. And that's one of the things that I hate to say you can always see when there's the end of a trend or the beginning of a trend. I mean, I remember March of 2009, like it was yesterday, risk had been wrung out of the markets. We were talking to clients, hey, even if you're conservative, you might want to increase your equity exposure. And clients were like, no, we don't want to do that. Well, now here we are, September of 2018, and we're trying to tell clients you've got to be careful out there. And they seem to be not wanting to listen to those conversations.
Right. Yeah, when they start asking about the weed stocks that
Correct.
are like up, I don't know, gazillion% over the past week. All right, let's refocus from the advisor point of view and everything we've spoken about over the past year. M&A and consolidation in the RIA space, I think that's a really interesting topic, and it just goes to show how much your segment is growing.
Yeah, it has been one of the fastest growing segments, and obviously there was a company that came public here on the Nasdaq this summer that was basically a large roll-up of RIAs, which really added legitimacy to what's the trend is happening. RIAs are obviously getting older. We talked about in one of my favorite segments about hiring younger RIAs. We really need to do that. There's really a need in the advisor segment for that, but we think that you're going to continue to see consolidation in the RIA space, and it might accelerate. It might not necessarily be only at the top. Now, there's been a lot of large RIA firms that have consolidated in the last 5 years, but there is a numerous small and mid-size RIA firms that they're beginning to have conversations like, what are we going to do? How are we going to either consolidate our firm with somebody else, or what are we going to do as far as an exit strategy goes? And I think that trend is going to do nothing but accelerate.
Like having these conglomerates of wealth management or RIA offices seems to be that trend.
Right. I mean, you can literally get on the internet in any small town. There might be a dozen RIAs that you didn't even know existed. There are many, many 1 and 2 people shops out there, and there's really not been a reason for them to consolidate. But we think that reason is getting more and more appropriate because as they, as those particular people age, they're going to say, well, do I sell to somebody else? What do I do? What's my exit strategy going to be?
All right. Now, social media, incorporating that into your RIA practice. I've seen over the past year just how much you've increased your social presence. You have to have a social presence.
Yeah, I think it's one of those things, again, is a question, do you make or buy? I mean, when I say that, do you have somebody at your firm responsible for the social media? Last month, we had our social media marketing director, Heather Coons, here doing our behind the scenes. I really think, and Heather would like to hear this, that you've got to hire somebody for your firm because it's got to be consistent and it's got to be professional. When you're talking to high net worth clients or institutions, you don't want to come off like, hey, I randomly posted something on Instagram. You want to see, and again, a shameless plug for the Nasdaq, a very professional, how are you doing it? What's the information that's being imparted? And what is the messaging? And is the messaging consistent amongst the firm? I mean, to just do one tweet doesn't make sense. You've got to be consistent with it.
I think clients like to see what happens behind the scenes too. Like when you get studio shots, like this is the process that goes into the content that we produce. And let's wrap it up with the RIAs. This also has to be an interesting conversation, talking about fees potentially rolling into a bear market because it's no secret we're a little bit toppy.
Right, and it's one of the conversations which I kind of find astounding that RIA firms aren't having because, one of the things, I had a meeting this morning with a commercial hedge fund, et cetera, as far as commodity trading advisors go, and if you were a large oil producer, you would be hedging your oil output. Well, if you're an RIA, you are essentially long the market all the time with your clients, and it has a direct impact on fees. We saw many RIA firms, many fee-driven firms in 2008, the revenues declined by 30%. So, I'm asking the hard question to a lot of my peers, are you prepared for a downturn? And it may not necessarily be one sharp downturn.
Right.
What happens if you go into an extended period of time where for the next 2 or 3 years, assets begin to trickle out, fees begin to decline? Will you, do you have enough wherewithal in your firm that you're still going to be around in a couple of years? And clients are going to start asking that question too.
All right, let's take a look at the charts. We'll kick it off with the S&P 500. August, which is usually sleeper month, was not.
Right.
What are your thoughts going into
Very
the fall?
strong run. I mean, the old sell in May and go away crowd for the second year in a row got trampled upon. We did see highs in August. It would not be surprising with the amount of volatility that is potentially coming into the market to see some type of breather coming on. There's a lot of news coming out in the end of the third, beginning of the fourth quarter. You have budget hearings. You're right now in the middle of Senate hearings, et cetera. We think it's something where it would not be surprising to see some type of breather in the market.
All right, and the Nasdaq comp, I think what was up nearly 5% just in the month of August and hitting all-time highs.
Yeah, another new all-time high, but again, a lot of volatility going on the Nasdaq. I mean, on a daily basis, the FANG stocks, last week, 2 of the FANG stocks were working. This week, none of the FANG stocks seem to be working. But that doesn't mean anything as far as the Nasdaq goes because we saw that happen earlier in the year. The Nasdaq went on to make new highs, but we think the volatility is going to continue in the Nasdaq because some of those stocks have really had huge moves.
All right, speaking of volatility, the emerging markets. That's been a really tough space, especially if you're a long-only asset manager in the emerging market space.
Yeah, it really has, and I think what's very interesting is after a peak in January, the emerging markets, whether you want to talk about dollar strength or credit, access to credit, it was a surprising peak in January followed by a long downward sloping trend line. I don't think it's over. I mean, a lot of people talk about value in the emerging markets, and they are cheap, but many times something that's cheap can get cheaper.
And the 10-year. I think it's got to be a couple of months or so since we have not seen any movement. Yeah. Right?
Yeah, it's basically after the highs in May, it's been trading sideways. Interestingly enough, the news wires over the last couple of weeks have talked about how many people, commercial hedgers, et cetera, are short the 10-year where everybody believes that the rates are going to be going up. When you've got that many people on one side of the boat, if you have any whiff of some type of economic, not even a slowdown, just kind of a slowing of what we've been doing the last couple of months, you can see the 10-year drop back down below. But it's been a very interesting sideways pattern because at the beginning of the year, it was like, hey, rates went higher and they're going to continue to go higher. They're either consolidating for a move higher, but our feeling is that they could possibly work their way lower.
All right, now let's wrap it up. Crude oil pretty interesting summer.
Yeah,
for the
yeah.
complex.
Another strong chart. It was going neck and neck with the S&P 500. Again, we set a new high just recently in crude oil. Would not be surprised to see it take a breather here as well. You know, a lot of money's been chasing a lot of these markets. And if you think about it, you know, if you have capital gains right now and you're getting towards the end of the year, it may be time to book some of those profits.
All right, my friend. Great to see you at MarketSite
Yes.
as always. Here's to the second year of our work together.
Absolutely.
All right, and thank you everyone for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.